This is Duke University.
Typically, accounting and finance researchers focus on information via annual reports or financial statements that contain numbers. And typically, less is learned about how managers actually communicate. So we take information to a different level, look at managerial communication. And the main question that we are asking in our papers is, can we get more information from the voice of human beings that communicate this information? In particular, people in the C-suite, like the CEOs and the CFOs, when they say things, can we learn something about what they want to provide or what they don't want to provide and make decisions accordingly?
One of the common venues that I study in general pertains to earnings conference calls, which is a venue in which CEOs regularly talk to the capital markets, investors, and analysts. And the series of studies Mohan and I have worked on pertain to what can we learn from that dialogue? What can we learn from what we hear from CEOs? And you might say, you know, conference calls are designed to inform outside parties. And so the purpose of our studies are to figure out and try to characterize what exactly can we learn.
We can think about information of two sorts. One is that when people want to voluntarily communicate some information, and information of the other kind, which is involuntary communication, where people don't want to communicate something, but that comes out unintentionally. When we think about information, we typically think about financial statements, but what we have done is we have expanded the scope of information by looking at how the human voice can be a carrier of information. In particular, when CEOs communicate with various interested parties, such as investors and analysts, can we learn something from not what they say, but how they say it?
When we have dialogues with individuals in our daily lives, we think about what we learn about how they feel based on how they talk to us. And so we thought if someone sounds upbeat, someone sounds down, you typically figure that, you know, something positive or negative has happened to them in their daily life. And so we tried to extrapolate that intuition onto a CEO and say, you know, if we're listening to a conference call and we hear a CEO that sounds somewhat positive or somewhat negative, are there ways that we can characterize that and see if in fact the stock market reacts in a way that suggests that yes, indeed, they can understand and hear what a CEO feels like, if you will, beyond the financial numbers they report, beyond the words they actually use, but how do they sound?
In the first paper that Bill and I wrote, we were particularly interested in how the emotion that may be contained in the CEO's voice can have implications for investor decision making. In the sense that we were trying to see if the CEOs exuded positive emotions, does it get reflected in positive stock market reaction? If the CEO exuded negative emotions, did it result in a negative stock market reaction? So basically the thesis in that paper is, if CEOs communicate positive or negative emotions, and that can be captured in a meaningful way, does it have implications for the stock prices?
And what we found was that on the positive side, that the market react positive to positive emotions. We saw that the market react negatively to negative emotions. However, we only found results when there was high scrutiny by analysts, meaning that there was an interrogation or there was a heightened sense of emotion. That's the subsample and where we find the majority of our results. When push comes to shove, it's difficult to know whether an emotion is going to be a short-run phenomenon or if it represents something more longer term. It's what we call a soft signal in the sense that it's hard to quantify. You know it when you hear it, but it's hard to quantify exactly how that might impact the stock, for example. And so we looked in the future and we said, do future stock prices react? Do analysts revise their future recommendations for the firm in a way that also suggests that they understand the emotion profile of a CEO? And what we found was on the positive side, the market reacted pretty thoroughly. On the negative side, however, what we found was it took a while for the stock market to impound or to price the negative emotion content that we observed in the CEOs. And part of that may be attributable to analysts' reluctancy to downgrade a firm when they hear negative emotion. And that prompted us to think, you know, what's the delay? What is the market waiting for? What are they learning in the future that's negative that allows the stock price to eventually drift negative after a conference call? And a natural negative event that we study in accounting are financial frauds or restatements.
In the second paper that Bill and I did, we were particularly interested in seeing if we can identify management dissembling. By that I mean, is there any way to detect emotions that may communicate about possible likelihood of fraud? After all, investors care about both good news and bad news, and investors care probably more deeply about the likelihood of fraud because they want to go out of the market or sell the stock at the first sign of distress.
Intuition for predicting financial misstatement is pretty straightforward. And in accounting, what we try to do, and in finance, we try to figure out, can we use accounting numbers? Can we use words to try to predict when firms might be being fraudulent? And in turn, reallocate our portfolios in a way that protect us from being a victim, if you will, of financial fraud as an investor in the capital markets. And so what we found was the negative emotion in voice actually was a predictor of restatements that happened over a year later. And they were as good as a predictor as standard financial metrics that we commonly study in accounting and finance.
One might ask, under what conditions that a CEO might exude negative emotion, because these CEOs are smart, they're capable of masking their emotions. But I think there is always the Freudian slip. Freud said that, he that has eyes to see and ears to hear can convince himself that no mortal can keep a secret. If his lips are silent, he chatters with his fingertips. Betrayal oozes out of his every pore. So Freud's notion was that even if you're smart enough to mask some elements of your deeds, I think it is likely that somehow it'll come out at some point in time. So what we were trying to do is, when conference calls happen, when managers talk to analysts, and analysts are asking tough questions, it is likely that there are going to be situations when the CEO slips. And what we are trying to identify is, can we capture that emotion and see how far it can help detect fraud?
What we try to do in these studies as well is think a bit more deeply about what are the primitive emotions, what are they driven by acoustically? And so one of the common things that we study, or that's studied in emotion research, is voice pitch and how it changes. And so voice pitch is a very stable trait of individuals. And so we're all born with a given voice pitch, and it's shaped by a lot of genetic factors. There's a limited range in which we can move it, but for example, males and females have different voice pitch. That's just a fact of life.
We have to be cautious when we think about identifying wrongdoers using this technique. We should think about this as one of many possible ways in which you can identify wrongdoings. So you can think about ratio analysis from financial statements could be one way of thinking about this problem. Facial gestures that can be identifying attributes of wrongdoing. And what we are saying is, through voice, you can actually glean more information. That could be an additional way in which you can identify wrongdoings or potential restatements in this context. Now, the third paper that we did was a slight departure from what we have done in the first two papers, in the sense that the first two papers focused on how information about emotions emanating from the CEO's voice can help guide our thinking about investor decision making. The last paper is more intrinsic. Can we learn something about the person from the voice itself?
Some colleagues of ours across campus actually did a recent study in a laboratory that showed that males and females, when they're going to elect someone to be a leader, they both, whether the candidate is a male or a female, both males and females prefer a lower pitch voice for a leader. And so what we thought was, does that generalize over into leaders of the S&P 1500 firms, or the firms that we commonly study and listen to their conference calls repeatedly every 90 days? Can we actually extract off of their voice information about the CEO themselves?
There's a lot of research in social psychology where they identified the human voice as a marker for certain characteristics, in particular the leadership capacity of the individual. In particular, they found that a person with a deeper voice or a low pitch seemed to be more persuasive, more convincing, seemed to have more leadership attributes than a person who has a squeakish voice.
The main finding is we find that deeper pitch voice CEOs get to run bigger firms, and as a result of that, they make more money. And they also tend to have longer tenures, meaning that they're employed at these bigger firms making more money for a longer period of time. And so what that suggests is that there are innate traits of individuals, as in our case measured through voice, that perhaps indicate characteristics that are beneficial to a leader. And other research has considered other traits, such as height, for example. There's a long literature on the height premium, that you get paid more, you're more likely to be a leader if you're taller. We're studying a different aspect, and as a group, these are viewed as biological economic markers, or the literature named biological economics, which is trying to think about, can we measure biological features of individuals and see if that matters in economic settings like we commonly study in capital markets.
So it is an interesting finding in that we are adding one more attribute to what is existing in the literature. In the past literature, we typically see that CEOs are individuals who are taller, and people who are more beautiful tend to be earning more money. And what we are trying to do is we are adding one more feature, that the human voice can also convey certain information that may be either correctly or wrongly characterized as something about the person's leadership qualities, and then that may lead to certain benefits in the form of being a corporate leader in a bigger firm and earning more compensation.
As a collection, the studies represent our initial venture into thinking about biological markers or indicators of emotion that you might be able to extract from voice. With respect to biological markers or trying to characterize CEOs, we really care a lot about that. Certainly voice pitch isn't the only thing that you might consider. Individuals are a collection of many, many traits, and we have identified one. We're not able to speak much to the effect of females, although you might expect that this may play a role for female leadership. There just simply isn't enough data points to do a rigorous analysis at this point, but we do think that there's potential to learn a lot more about both male and female labor markets. There's also the ability to learn about, in combination, how various traits, height, facial features, voice pitch, how do they combine to give a holistic or a more holistic picture of the CEO as a leader. Doing that is the next step in the research. With respect to emotions, intuitively it makes sense that emotions arguably convey information. And a difficulty you face when you analyze real-life data is it is a real person, the stakes are high, which they call ecological validity, and that's good in terms of eliciting emotion. However, they do have IR teams, they do have cue cards, and to the extent that CEOs can mask their emotion, or they try to mask their emotion, can they? We don't really know the extent to which they can, and so more research is needed in order to really truly assess the potency of extracting or thinking about the information content of emotion that you can learn from voice on conference calls.
What our suite of papers has done is given us some credible way of thinking about how human voice can be used in financial markets. Now, of course, one has to be cautious in terms of taking it to the extreme that voice can be the sole or the most important determinant of either an individual's characteristic, or for that matter, the way in which you can discern emotions from a particular individual. All our papers are saying is that it is one extra attribute, one additional attribute that you can consider when allocating resources, if you're an investor, or trying to identify a leader for the C-suite.